So, Thomas, if nat gas energy is a real focus point for your ETF GRZZ, and it's a barbell approach, you want energy and then you want growth stocks.
Yes.
On the energy front, which stock would you want to participate in?
So we've got several that we play. I think I think natural gas. EQT is the name we like. It's the largest producer. Marcellus, Great Rocks. These guys are just churning out free cash flow. That's a clean story we like, and it's in America. Very important. We just had the UN, director general. He's like, hey, listen, tax these guys. I'm like, no. I want to be in the most capitalist place right now where my stuff is protected. I'm not going to go, I'm definitely not owning, whatever in Europe right now. Europe is a mess, right? So just, you want to own it in the bastion of capitalism in America. Also, secondarily, what we like is electric metals. We think that will continue, right? So we think copper, lithium. So on the copper side, we like we think the small mid cap space is incredibly cheap. We like Sierra Metals, and then on the lithium side, we like SQM, which is an incredible value play on the lithium side. And then also we believe with all the additional renewables that have been added to the grid, we haven't added real grid stability. So we need grid level battery storage. So we think vanadium redox flow batteries are the clear winner there. And the name there is Largo. So we think that group of stocks there is very interesting. And for those who are, more conservative, we think one of the best risk reward plays, it's a top holding in our ETF as well, is NextEra Energy. They're a utility based in Florida, fastest growing utility in America because it's Florida. There's ton of economic activity there, and also they've also been a leader in renewables. So combination of continuing to put in renewables, continued growth within the state, and electricity usage within the state. And what you get there is when you buy a growth utility, as you were saying, Catherine, as the market, if the market's starting to price in rate cuts, that's a good thing. That'll be a good thing for utilities. And so what we're saying is there's a nice balance there because you get the growth aspect and also you get the protection.
It's interesting when I was looking at the market yesterday, I think it was yesterday, the utilities were continuing to be an outperformer, and they have been an outperformer. I'm not entirely sure why, but, in the sense that the valuations, and again, I felt like I missed that trade big time. And the valuations, to me, when I did look at it, were way out of whack versus what a utility would normally trade at.
Yeah, and so I would agree with you for actually most of the market there, with the exception of Xterra, right? So most utilities are not growing. Nextera is growing 14% year on year. That's a significantly high growing utility, right? So we would say yes. For most utilities, you could think of them just like a bond, right? Like based in Alabama, whatever. Name a state that's doing nothing. Name a province that's doing nothing. They have exposure to that, right? Like in general, right? But for some utilities that have torque and growth, we like them, right? And for Nextera, based in Florida, they're putting on a ton of renewables, so they're going to be the first ones to put on battery storage. All of these things that require capex in the ground, they're going to put in vanadium redox flow batteries or any other type of batteries. We think that whenever you're the leader, you're the one that's going to be putting capital in the ground, and that increases your rate base, which is what you charge your users. And it doesn't hurt that that the new Silicon Valley is in Miami as well. So all of that plays to the story there. But again, it's very specific. So I would 100% agree with you. For the most part, utilities are like bond proxies, and kind of poor ones at that, but versus a growth, high cash flow yielding utility like a NextEra.
Got it. And just to be clear, what's the ticker on it for everybody to know?
Yeah, so the ticker on Nextera is NEE. And I'll give you all the tickers. So the ticker on Sierra Metals is SMTS in New York, SMT in Canada, and then for SQM, that's SQM in New York, and then Largo is LGO, both in the TSX and the New York Stock Exchange. And
EQT, okay, so great.
And sorry, EQT is EQT.
Right.
In the New York Stock Exchange.
Yeah. Yeah. So that's good. So for some Canadian viewers, you've got two that trade both in Canada and the United States, LGO and SMT. Correct?